Hey guys, Jimmy H here with Jimmy H Financial. I haven't done a video in a while, so I'm going to start to do videos again. Hopefully, I can keep that promise. But as of today, I'm going to do a video on the topic: should you pay off your mortgage early, or should you wait and just do the 15, 30-year term, the loan and whatnot, and the pros and cons on that. A lot of people reach out to me and ask me, which is better. And it really depends on your situation and what you value, right? What you value more and what not. So, in the board back there is blank right now, but on the next segment, I'm going to actually have pros and cons on paying off your mortgage early or not. It might not be for everybody, and it definitely not might not be for you or I. We might have, two different situations where we're at in our lives, and paying off the mortgage first would be better or not, right? So, on the next segment, I am going to talk to you about that. All right, guys? All right, guys, welcome back to the board. Sorry for the glare. I turned that light on earlier. It cast a glare right here. You couldn't really see half of the cons. So I turned it off. Hopefully you guys can see a little bit better. I probably need better lighting, but it's daytime right now. It's not nighttime, so it's going to be a little bit rough with the sun glaring into the window as well. I did close the blinds, and hopefully you can see this or not. But like I said, this is just my opinion. I'm not a financial advisor of any sort, so take it with a grain of salt. And then it's for entertainment purposes only. I forgot to say it earlier, but yes, this is entertainment purposes only. And if you want to use my opinions and you relate to it, great. If not, that's fine too. So I'm just listing out the pros and the cons, right? Paying off your mortgage first, right? I mean, not first, but early. So there are pros to it, of course. Number one that comes to my mind when I was writing this is peace of mind. After you pay off your mortgage, all you have to worry about is your insurance, utilities, and property tax. I think those are the three things, right? That everyone has to pay for, and you don't have to worry about paying the bank, say 1,000 or 2,000 worth of mortgage. That's believe it or not, most of us, the chunk of our paychecks it goes directly to our rent or our mortgage. If you're a homeowner, definitely the mortgage. If you're a renter, definitely your landlord, right? So one is peace of mind. If I'm going to lose my job tomorrow and my house is paid off, I could come up with a couple $100 to pay utilities. The property tax will be, biannually every 6 months, so I can scrap up some cash by then. And then, of course, my homeowner's insurance, which is also annually, right? So I really could scrap by it just for paying for utilities, right? If I was going to lose my job. So peace of mind is very big in my mind for paying it off early. Number two, reduce overall interest. If you pay it off early by putting either a double, triple, or what I do is velocity banking. I put in a big chunk to bring down principal balance. I will reduce my overall interest and amortize interest on the loan itself over a 15 or 30-year period, right? So you're going to pay a lot less in interest to the bank than you would think. I mean, there is worksheets out there that will show you exactly what I mean. And basically, let's just give me a second. If you buy a house for 100,000, by the time you pay it off in 30 years, it'll probably be 200,000 or a little bit over 200,000 that you pay total in to the bank in that 30-year frame. Which is why that's the reason why banks are in business to make interest off you. So as far as me, I would not want to pay the bank two times the house that I bought for, right? Yes, I got a loan from them, but I like to pay it off as quickly as possible. That's just like I said, this is my opinion, right? Number three, you can tap into your equity if you need to, basically. Like basically, the more you have an equity in your house, you could go to a bank and say, "Hey, I need a line of credit. I need a home equity line of credit or a home equity loan." But if you're gonna go this route, I would advise you to get a line of credit versus a loan because a line of credit is just like a credit card. If you don't use it, you don't owe any interest. But if you get a loan out, so you get $100,000 loan out, it's going to be $100,000 loan interest that you'll be paying right away. So line of credit. All right. Number four, positive cash flow. So once you pay it off, like for myself, my mortgage is about $2,000, right? Once I pay that off, guess where the $2,000 goes to? The $2,000 goes to my savings or to other investment that I might put in, or just sitting in the checking account, right? So those are the top four that I could think of when I was writing it. There are cons, by the way. There are cons. So cons number one is liquidity. What I mean by liquidity is that if you pay everything off, it's kind of tied to this. In order to get your money back out, you will need to go into and get a line of credit from a bank. So you have to borrow back out from you. Versus if I have it in, if I just pay the minimum every month, like the 2000, 2000, 2000, 2000, whatever extra is going to sit in my saving or my checking. And then I can just pull it out, go to the bank, withdraw it out, or whatnot, right? Liquidity. So it's going to be harder for you to get your cash back out unless you do have a line of credit. That's why earlier I said get a line of credit versus getting a loan, right? Number two, you're going to miss out on other investments. So what I mean by that is you can buy stocks with your spare money, or you can buy the next crypto. That I'm not into crypto, so that's why I don't know anything about crypto. But stocks, crypto, even other investment properties that you might have if you're into real estate. Because you worry about paying it off quickly and dump everything in your first mortgage, you're going to miss out on that investment, right? Number three, your emergency fund. Well, if you keep trying to pay off your house quicker and quicker and quicker, then you will eventually don't have a nest egg. What I recommend is always have at least a 3 months emergency fund. That means you'll be okay for at least 3 months if something happened. If an emergency happened, you have at least 3 months. Many people advise 3 to 6 months. 6 months is a little bit overkill in my opinion. 3 months is perfect for me. So that's what I have. I have a 3-month emergency fund that I don't really tap into. Just leave it there. Number four, negative cash flow. I hope you can see that. I think it's a little bit clearer, but negative cash flow. So what I mean by that is just the opposite of this. If you're gonna pay off your house, like if my house, for example, $2,000 mortgage, if I put 4,000 every month, if I had the extra 2,000, then I'm gonna be negative cash flow. I can use that 2,000 for something else, kind of like here, or kind of like put in my emergency fund, right? Or kind of like liquidity, right? So I'm gonna use that 2,000 trying to pay off the mortgage versus use it for any other purposes, right? And so it's a negative. Oh, versus over here is a positive, right? You have more money to spend, there's less money to spend. So overall, those are the four reasons that I thought of when I was thinking about this topic. Tell me what you guys think in the comments below. Should you or did you pay off your mortgage early? Or are you the ones that want to ride it out the term of the loan, 15, 20, or 30 years, right? Um, as for me, my personal opinion, I try to balance it out. I do try to balance it out. If I have an extra money, then yes, of course, I'm going to pay it off early. But if I know I don't have extra money, I'm living paycheck to paycheck to paycheck, then paying it off early probably won't be my best solution to getting paying off a mortgage, right? So first of all, the priority is surviving, right? If you scrap some money and everything just to pay off your mortgage, yes, it's good at the end, but when you ever get to the end, that's the purpose, right? The main goal is get to finish it. But if you try to scrape your money and live on top of ramens every single day, you eventually get to the end, or you might not. I don't. You might die before that, right? So anyhow, so I balance it out. Right now, I do have investment properties and whatnot, and I am trying to use the investment property as a kind of like a snowball effect, kind of pay off the investment property, and then in reverse, I can use that rental income to pay my mortgage in my main house, right? So I do both, and like I mentioned earlier, I do a theory called velocity banking to quickly pay off your mortgage anyway. And if I get enough questions on velocity banking and whatnot, I will definitely make a video of it. It's a little bit more, I guess, a little bit more detailed that you need to discuss the theories behind the velocity banking. And if you try to brush right through it, no one's going to understand what velocity banking is, right? So I would have to make probably like a longer video on it. If I get enough requests on it, then I will definitely do it. And I don't mind doing longer videos as long as you guys don't mind watching me. All right. But as far as paying off your mortgage early, here's a quick overlap of what I think the pros and the cons are. And if you agree with me, let me know. Give me some comments and say no, I would never pay off my mortgage early, or yes, I will pay off my mortgage early, right? And other reasons too. I tell you, there's other reasons, but it depends on the situations that the individual's in, right? This is just my four, each pro and cons, right? So, like always, thanks for your support. Happy New Year, if I didn't say so earlier. And hopefully this year will bring us, prosperity and whatnot. All right, and good health, right? So, thumbs up if you like it, thumbs down if you don't. I mean, you got to be honest, right? If you don't like the topic, you don't like my videos, you can always put a thumbs down, or just don't do nothing at all. Just just watch it and view it and whatnot. So until the next video, all right, and I'll talk to you next time. Once again, this is Jimmy H with Jimmy H Financial. All right, I'm gonna end the video. Thanks, guys.